Ever wondered why Warren Buffett, the Oracle of Omaha, has always been skeptical about gold? Has his view changed in 2023? Let's dive in. Warren Buffett, the financial maestro, has long held a rather unflattering view of gold. He's often likened it to a pet rock, a non-productive asset that neither pays interest nor dividends. His skepticism primarily stems from gold's limited utility. Unlike stocks or real estate, gold doesn't generate income. It doesn't innovate, grow, or create value. It simply sits there gleaming in its yellow splendor, and its worth is largely dependent on whether someone else is willing to pay more for it tomorrow. But what about the argument that gold is a safe haven in times of crisis? It's true that gold has historically been seen as a store of value. In times of economic uncertainty, when currencies fluctuate and stock markets tremble, investors often turn to gold as a kind of financial life raft. But Buffett, with his long-term investment horizon, argues that productive assets like businesses and stocks are a better bet in the long run. They generate income, grow, and adapt, unlike gold, which remains static. So, has Buffett's perspective on gold evolved in 2023? Well, he still maintains his skepticism, but he acknowledges that gold can serve a purpose in a well-diversified portfolio. It can act as a hedge against inflation and provide a measure of security in uncertain times. But he cautions that it should not be the cornerstone of one's investment strategy. Buffett's views on gold stir up an intriguing debate. Is gold a limited utility asset, or is it a hidden gem that shines brightest in times of crisis? Like most things in finance, the answer isn't clear-cut. It depends on one's investment goals, risk tolerance, and market outlook. But one thing is certain: Buffett's insights give us a lot to think about as we navigate our own wealth journeys. So, is gold a limited utility asset or a hidden gem in times of crisis? The debate continues. Remember when Buffett likened gold to a staring contest on CNBC's Squawk Box in 2009? What exactly did he mean? Let's break it down. Warren Buffett, the Oracle of Omaha, is known for his colorful analogies that simplify complex financial concepts. In 2009, he drew a parallel between gold and a staring contest. Now imagine yourself in a staring contest. You're eye to eye with your opponent, neither of you blinking, both of you waiting for the other to make a move. But nothing happens. There's no action, no response. It's a static situation. That's how Buffett views gold, a static asset. Buffett's perspective on gold is shaped by his belief in the importance of utility in investments. He has often emphasized that an investment should have the ability to produce something. According to him, the best investments are those that generate continuous streams of income, like businesses or real estate. On the other hand, gold, as he sees it, doesn't do anything. It doesn't produce goods or services, doesn't pay dividends, and doesn't create jobs. It simply sits there, staring back at you, doing nothing. It's not productive. It's static. The value of gold is largely driven by what the next person is willing to pay for it, not by its ability to produce wealth. Now let's contrast this with productive assets. Productive assets like businesses, real estate, or stocks generate income. They work for you. They're not static, they're dynamic. They create wealth, not just preserve it. As Buffett puts it, if you own an ounce of gold now and you caress it for 100 years, you'll have an ounce of gold at the end of 100 years. But if you buy 100 acres of farmland, it will produce a substantial amount of crops for you each year. Gold may just stare at you, but productive assets work for you. That's the Buffett way. Buffett sees gold as a bet on fear. Intriguing, isn't it? Let's peel back the layers of this perspective. When you look closely, this view is rooted in the psychology of human behavior, particularly during times of uncertainty and crisis. Picture this: the markets are tumbling, the economy is in a downturn, and the news headlines are filled with doom and gloom. What do investors typically do? They flock to gold. It's an instinctive reaction driven by fear. Gold is seen as a safety net, a shelter from the storm. The price of gold often soars when fear permeates the market. But let's flip the coin and look at this from another angle. Buffett's viewpoint suggests that gold is not a productive asset. It doesn't yield dividends or interest. It doesn't innovate, grow, or contribute to the economy in the same way a business does. It just sits there, its value tied to the emotions of the market. So, if you're betting on gold, you're essentially betting on fear. You're hoping that the level of fear in the market will increase, driving up the price of gold. But what happens when the fear subsides? When the storm passes? The allure of gold diminishes, and its price could potentially drop. This is where the risk lies. The value of gold is inherently tied to the ebb and flow of fear. It's a bet on an emotion, an unpredictable and fleeting sentiment. It's a bet that fear will prevail. Indeed, gold can act as a safeguard in uncertain times. It can provide a sense of security when the world seems to be spinning out of control. But is it a sound long-term investment, or is it a precarious bet that relies on the rise and fall of fear? Is gold a safe bet or a gamble on fear? It's a question that continues to spark heated debates. And as we journey through the financial landscape of 2023, this question remains as relevant as ever. So let's keep exploring, let's keep questioning, and let's continue to unlock the wealth mindset with Warren Buffett. We've got a special treat for those of you who've stuck around till the end. A nugget of wisdom that ties together Buffett's timeless principles. And what might this golden nugget be, you ask? Well, it's the embodiment of Buffett's investment philosophy, a key to unlocking your own wealth mindset. Let's unravel this piece of wisdom, shall we? Buffett's approach to wealth generation is underpinned by the principle of value investing. He seeks out undervalued companies with solid fundamentals and strong growth potential. But how does this relate to gold? In Buffett's view, gold doesn't produce anything. It doesn't innovate or grow. It merely sits there, as he so candidly put it, engaging us in a staring contest. So here's the bonus insight. Buffett's skepticism towards gold is rooted in its lack of productive value. He values assets that generate wealth, not just those that store it. That's why he favors stocks over gold. Stocks represent ownership in real companies that can grow, innovate, and produce wealth over time. But how can you apply this insight in your wealth journey? The key lies in developing a discerning eye for value. Look beyond the glittering appeal of assets like gold. Instead, seek out investments that have the potential to create wealth, not just store it. Remember, wealth isn't just about having a lot of assets. It's about having assets that work for you, that generate income and growth. This is the essence of Buffett's wealth mindset. It's not about chasing the next big thing or succumbing to the fear of missing out. It's about making informed decisions based on solid fundamentals and long-term value. So as you navigate your wealth journey, don't be swayed by the shiny allure of gold or the latest investment fad. Instead, cultivate a wealth mindset that seeks out value, growth, and productivity. This is the key to unlocking sustainable wealth and financial freedom. Remember, the key to wealth is not just in the assets you choose, but in the mindset you cultivate. As we navigate the financial landscape of 2023, Warren Buffett's insights on gold provide a fascinating lens through which we can refine our own wealth mindset. Today, we've peeled back the layers of his perspective, examining gold as a limited utility asset and as a bet on fear. We've questioned its static nature, and we've pondered its role as a safeguard in times of uncertainty. We've scrutinized Buffett's skepticism and his enduring allure for productive assets. Each insight offers a fresh viewpoint, a new way to approach our own financial decisions. It's not about the right or wrong investment, but about understanding the underpinning principles that guide those choices. It's about unlocking your wealth mindset, and that, my friends, is the real hidden gem. If you found this exploration valuable, give it a thumbs up, subscribe to Freedom Wealth, and hit that notification bell to stay ahead in your wealth journey. Thank you for tuning in, and remember, the journey to wealth begins with a mindset.